Hello and good afternoon. You're watching Moneycontrol. I'm Karunya Rao and with me is Manisha Gupta, and she has some more bad news for us again.
Right.
After the surge we've seen in metal prices across the board, there is also a rebound that we're witnessing in oil prices. Now, what's happening there?
So, interestingly, and this is almost year end, and we're looking back at how the year has been. And starting from the first quarter itself, every week has seen $10 to $12 of a range in case of crude oil prices. I mean, for a consumer country like us, that's not very good news. And the way the prices have rebounded yet again clearly tells you that this is where we are headed here to stay. So, even as the OPEC meeting has happened and a G7 price cap and a European Union price import embargo has happened, none of this really has had that kind of a moving effect on crude oil prices. Yes, it has been very volatile, but it seems to be trading within that range itself right now. But the markets are choosing to look at the positive news. China is opening up. The dollar index, even after a rebound, is still at around 105. I think those are supportive
So,
factors.
there's an expectation that demand will rise, of course, China being a big consumer of it.
It is. So what we have seen a hope premium already building into prices. When you look at demand actually coming in, you will see much more gains in prices.
Do you see significant up move from here, from the current level?
Not really. I think we are looking at that range between $70 to $95 per barrel for the Brent
quite
prices.
a range.
But that's how we've seen crude prices trade as well.
Yeah. So 70 to 95 is where?
75 to 95.
But have brokerages and analysts also now recalibrated their forecasts, because we were seeing some very crazy numbers in the first half of the year?
Well, yes. So nobody's really talking below $70, $75 per barrel, but those kind of numbers, 75 also is an expectation in 2023 when you see a more balanced approach coming in for the market. When you look at this year, and this is Wood Mackenzie's report, which says that when you look at the supply growth, that is gone up by 4 million barrels per day. The demand growth at 2 million barrels per day. So we still are looking at higher supplies. Is the reason the crude prices came off from that $139 of a high that we saw in the month of March, and the second half of this year, it majorly has been between that $75 to $100 a barrel. Now that range seems to be getting even more narrowed.
Right now, I mean, of course, our own markets are following the cues from global markets, which have been a tad weak since yesterday. But should our investors, equity investors, be worried about what's happening in the oil market, in the commodities market? Because once again, if things do scale up meaningfully, it means bad news for India Inc. and it would mean weak earnings and then weaker gains.
Oh, well, yes. For the day today, it isn't great global news. One, you have a rebound in crude oil. Second is even the rupee has continued to depreciate. I mean, today is the third straight day and we've broken 82.2 quite easily. I mean, we're trading much lower there, and you have a monetary policy coming in tomorrow. So yes, it is going to be quite jittery going forward. What the markets do believe is that as of now, what couple of things that you can look forward to. One is the Russia retaliation. It has to come in some sense. As of now, they still are contemplating on that. So whether it's going to be about crude, whether it's going to be about some kind of curbs on metals on these countries which have participated on price caps. For India as well, even as we are looking to renegotiate with Russia in sense of prices, we could be looking at higher discounts. But the reason for the discount is because we are going to be paying higher when it comes to freight and higher for insurance, because many of these companies will now not be servicing those Russian tankers. So whatever discount we get from here perhaps would be nullified because of the kind of rupee decline we're looking at and the higher cost that you have to pay. So are we
perhaps that's why we've not seen much of a downward revision in our own fuel prices, right? Because clearly the costs have not changed for the government, who's buying oil from Russia at a discounted price. Okay, so what to expect now? Because things look very vague. Of course, the latter half of December is usually a very dull period. Volumes will be low for markets and for commodity markets. So what should we expect as investors or even as traders who are trading in the commodity?
I think you're looking at a very tight range going forward from here. Do you think that by this month end there would be a lot of change? It doesn't look like so, because all the good news has been factored in. What you will watch out now is for Russia retaliation, which is not going to be positive for prices. And the second is going to be about the 14th December US Fed meeting that has been factored in. Anything out of the whack again will start moving prices. So I think we're looking around these $80, $85 per barrel kind of levels is where the year could end. The surprise could really come in from the natural gas part of it, because that is where Europe still has a concern. That is where Russia would want to hit, because that is where it hurts the most.
Well, yes, and as of now, looks like things will be largely range bound, so don't expect anything meaningful unless, of course, the Russia factor comes into play. With that, it's a wrap. Thank you for tuning in.